Are you excited? I'm excited. This is a great trading day. It's Monday. It's a new week. We're rolling into a new month pretty soon. Lots of opportunity. Oh, sound is weak. Ah, ha, 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 ha. Ni hao ma. So yeah, wonderful trading week ahead. The end of a month, the beginning of a month, the beginning of a week, all that kind of stuff. Bring the mic closer. Yeah. So lots of opportunities in front of us. Markets are moving. Targets have been hit. New plans need to be laid. So without further ado, welcome to Forex.Today. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. Traders Way is the sponsor of this webinar. Please pay it back by visiting Traders Way. Check out the demo account. Super quick, super easy, super fast to set up. Less than a minute. I'm quite certain of that. Open up a demo account, then you can test out their execution speed. You can check out you can have a variable spread account, fixed spread account. You can have an ECN, which is a no spread account. Check it out, man. And one of the things you should do is look at the swaps that Traders Way pays you. Amazing. Of course, world-class customer service, and they make sure that these webinars are available for you every single day. And why do they want that? They want you to succeed. Maybe why do they want you to succeed? Because you'll be a better client. You'll trade more. You'll trade more often. You'll trade for years and years and years. So look at it as a symbiotic relationship. They've set the table and lit the candles. Why don't you pour the wine and sit down and smile at each other? Start a relationship. Tradersway.com, huh? By the way, this is a webinar and it's live. You can ask questions and get involved. I will cover technical analysis and fundamental analysis. Probably go through the calendar today to look at the risk events of the week. We can do dollar pairs, yen pairs, Swissy pairs, your pairs, my pairs, his pairs, your pairs. Over pairs, but not underwears. Anything you want, man, it's your way. Thank you, Traders Way. Oh, let's move this. Boop, boop, boop. Trying to get that just perfy. There we go. Euro Aussie, what pairs would you like me to cover today? Yeah, Forex student, hey, if it's not QE, then what is it? You know, the language is really funny, right? Like, so I was listening to an interview with Robert Shiller, the Yale economist, that's also a Nobel laureate. And, he was talking about how, like, we call the Great Recession, but he's like, by all intents and purposes, it was a depression, but nobody wanted to call it a depression because the depressions are bad. So we just renamed it a recession and everybody felt good with it. Then he's like, everybody knows the Great Depression, but during the Great Depression, nobody called it the Great Depression. It was just like hard times. Times are hard. That's all it was. Someone else, by about 1935, named it the Depression, and we called it that. The actual Great Recession was like the economic slowdown of 1883 or something like that. And then he said, all his graduate students in economics, they've never even heard of Black Friday in 1987. So, it's really interesting. You call it what you want, man. Call it what you want. Maybe it's the intent, Forex student, but or to the degree. So changing interest rates is one thing. That's a normal open market operation. Crashing rates is probably something different. But anyways. All right, so euro dollar, USD yen, USD in general, yen pairs, euro yen, Swissy, gold, euro dollar, euro lira, Aussie dollar, gold, oil, Good morning. Good morning to you too. Happy New Year. And to you. And gold. So lots of gold, all that kind of stuff. Cool. Well, I'll try to cover all of those today. I have the lira open. So why don't we start with that euro lira that somebody asked. There's the trade plan. Lower low, lower high. Sell, sell, sell. And look, it fell back into the moving averages, a new lower low. So I seem to be golden there. You know what? I need a drawing tool. Boom! Where's my drawing tool? Where'd the drawing tool go? Drawing tool. There it is. Boy, it's slow. Slowest drawing tool in the market. There we go. Cool. Let me move this over just slightly, and then let me bring this up. All right, even better. All right, even better than the real thing. So let's do this. Boom, boom, boom. So this dropped, then it rose, and then I sold it. It fell, then it rose, role reversal, and now it's fallen again. You know what? That's way too fat to make any sense. Let's try it again. Down, 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 up, up, sell. See the first sell? Down, 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 down. What do you do now? You mark the role reversal. That's near sell zone. Sell. And that, oops, and that's where we are now. Cool. Right on. Looks like the new beginnings, but nothing's really changed. You just had your open here, so you could have added another one today. Okay. Okay. Which pair are that? I can't see the chart. Euro lira. Come on, I'm trying to get rid of my drawing tool. All right. Let's change the template so that it has. Okay, cool. There you go. Euro lira. Okay, so you can see the Friday front run there. Pretty obvious. Down, 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 up, up, down. Right. Friday front run. Target here. 626. 625.94. Target is M2. No, absolutely not. M1, yeah, I'll accept M1, but M2 is never a target. M2 is never a target. M1, sure. But in this case, because it's kicking off the central pivot point, I would go for S2. That's why I said 625.94. You can't see it? You guys can't see it today? Could you please maximize the chart? Really, you guys can't see it today, but you could see it before? Yeah, all right, cool. But I also, here's the other thing. I'm assuming you've already gone through your own charts, right? So you should know already, right? Yeah. So you should, it shouldn't be anything new, right? So I'm going through my charts. You've already gone through your charts. So together, we're just looking for congruency or differences, and we discuss those differences intellectually and all that kind of stuff. But anyways. All right. So here's the old plan, as we know. Okay. I have it all drawn out. And then on the smaller time frame, I got to plan this out with a different color. Blue, let's say. The plan here on the smaller time frame is this, as you can see. And so far, so good. So the first setup, really, this began the beginning of October, set up the first week. So basically, this is the end of September. Here's the beginning of October. Then it dropped another week. So now we're 3 weeks into the setup. On the 4th week of the setup, I sold. On the 5th week, it was profitable. On the 6th week, it continued to be profitable. So that's where we are now in that. But we still got some juice in this, I wouldn't call it a lemon, so I guess in the orange, right? So this should be heading down. And of course, all of this we predicted, a month or something in advance. I don't have Kiwi Lira, sorry. Prince says, Wayne, is it me or does USD and yen generally look... Well, I'll show you. By the way, you should have already known this weeks ago. I'll show you. We discussed it multiple times since then, but it's something that you should have already anticipated, that strength. Okay, Prince Philip? So, like, the fact that it might or might not be strong right now is irrelevant. It doesn't matter, right? So now I'll show you. Okay, I was going to show you. So anyways, we'll get off these exotics. Well, I guess I can show peso on this one. All right, so on peso, for example, we are at the target for the month. You should anticipate dollar strength. Okay, Prince Philip? That's what that means. Why is it based on, why would there be dollar strength? Profit taking. That's what that whole big gray area down here tells you. So you wouldn't say, oh my God, look, what's creating all the dollar strength? You're like, well, that right there. Look at it. There it goes. It says, get ready for dollar strength. Okay? Because traders who were buying Mexican peso now are getting out, which means they're selling peso and buying dollar. Dollar strengthens. Okay? So that's all I'm saying, is that's what it means. And so now let's go through like some yen pairs, for example. There are a few on here I want to show you going along with that theme. Is the dollar getting strong, he asks. Well, you see that chart? As of last week, you should say, yen's probably going to start getting strong soon. Yeah, well, Michael, it's not the interest rates, it's the anticipated change in policy. You're not trading this rate hike or cut. You're trading the expected next one. Finance is all about the future. Okay? The future value of money, for example. Okay? Accounting is how much money is on the table right now. And how much did we maybe even have on a different day? And maybe you can compare the two. And then you can make a ratio and all that. But accounting is how many beans in the bag. Okay? Finance is how tall will the plant grow and how many beans will I get from that plant in the future if I plant these seeds now. Okay? Same thing in what we do. What the differential is right now is not necessarily the catalyst for the move. Now, it might be why you're in it. So like if I'm collecting carry, I like that, okay? But as far as currency valuation trends, it's typically the anticipation of the next policy change. And you go years without policy change, okay? So for example, the dollar weakened about, 2-3 weeks ago? Why? Because it's assumed by most market participants that the Fed is near the end of slashing interest rates. That's all that matters. Are they going to cut interest rates in the next meeting? Yeah, probably. Doesn't matter. We're not trading this meeting coming up. We're trading everything else, okay? Because Because I showed you a couple of weeks ago, I did that lecture on behavioral finance. It's the behavioral finance part of it. Okay? So people are saying, no, the trade is dead. If you can't front run the Fed, then the trade is dead. That's what people were doing. So if they're not buying bonds anymore, there's no reason to front run them. So they've moved on. In that case, dollar weakens. That's simple, okay? So anyways, going back to this, guys, like, hey, is it me or is the yen likely to get strong, or does the dollar look like it's going to get strong? Well, we knew that here, and here, that as we approach this level, it's much more likely the yen is going to get strong. Okay? But let's look for other things. I didn't mean to be here. Let's see. Let's change this to monthly. Okay? See this red area? What does the red area mean? That the Japanese yen is likely to get strong. That's all it means. So far, it's not you at all. Or is that how you answer that? When someone says, is it me or is the dollar look like it gets strong? I don't know if it's you, but the dollar's supposed to get strong is what I'm saying. All right, look at this. See this big gray area? You know what that says? Dollar's likely to get strong. But we knew it yesterday, 5 days ago, 8 days ago, that's what it means. And same thing like, here's pound dollar. Well, it went even higher, but that's irrelevant. What it means is we're at prices in which the dollar is likely to get strong. Doesn't mean buy or sell. Okay? Okay? That's what these things mean. So is it a surprise? No, absolutely not. Yeah, I know you get it, Prince, but I have to drill it home, right? Because now you get it forever. Not only do you get it, now you got it. You get it, you got it, you know it's good. My trades are tight. You wish you could. Yeah. That's what it means, guys. That's what it means. Remember, don't look at charts and say, oh, it tells me to buy, it tells me to sell. It doesn't tell you anything. Okay? But it can help you anticipate using technical analysis, changing market conditions. So if we're up in a pivot profit zone on a monthly basis at the end of the month, guess what? There might be a change in that trend. By the way, many of these things I showed you, at least 2 weeks ago, that you need to start fading out of some of those trades. Why? The trend has come to an end. Right? Don't you remember I said things like, you either have the discipline or you don't? Oh, but Wayne, it might go higher. It might go farther. So? Right? So what? Cool. Let us go now and do some gold and do some oil. Hey, did you click that like button yet? I don't think so. Huh? Click the like button. Come on now. Kick down, come clean. Don't be a holdout machine. It's not like it costs you $1 or something like that. Come on, click the like button. Cool. So here we are, WTI slowly climbing up the Hillary step. Slowly climbing up. That's cool. Once again, when we were down here at 51, I said you have to decide, are we dropping below 50 or are we going back to 60? Hey, we're at 56.5 now. You should also know that this is where bears might want to get involved. We don't know. By the way, thank you for the clicks. Okay? Now, only 60% of you haven't clicked it. Huh. So 40% like it and the 60% just couldn't possibly go out of their way to click the button. That's amazing, huh? Oh, just popped again. So now we got a good half. 50% have have the common courtesy to click the thumbs up button. Okay. Andrew, go to youtube.com/fxbootcamp and take the free training course. Okay? You'll get, I think it's about an hour and a half overview of the trading strategy. Okay? We can't take everybody here through the basics. youtube.com/fxbootcamp. I'll type it here. Okay? Actually do it, all right? Andrew, most people don't do anything. Probably why 95% of traders fail. They just don't do anything. So be one of the 5%. Actually click the link, actually find the playlist, and actually watch the videos. And just do it, because 95% of people don't. So I love that attitude, like just do it simply because everyone else won't do it. For example, when I say go to the Reserve Bank of Australia website and spend an hour looking at articles and speeches and watch videos that the central bank has posted to the good people of Australia so that they understand economic conditions and the policy that the central bank is carrying out on their behalf. Okay? I bet you 99% of you won't do it. Not even 95. 99. Probably 99.5% will not do it. But imagine the son of a gun that does it. That's the person you want to invest in, right? Okay. Mr. Highvolt, figure it out. There's only like 3 playlists or something, and 2 of them don't work for some reason, just because the videos are so old. But I'm sure you'll figure it out, right? Jesse Boy says, why not? You know what? I don't know why, Jesse Boy. Not everyone can be a champion, I suppose, right? Yeah, Mr. Highvolt, that seems about right. Yeah, Michael, that's what I would say. And if someone told me that, I would take it as a personal challenge. And I'd go for it. Like, I'm going to show him, I'm going to make Wayne proud. That's how I react. But then not everybody's the same, right? All right, so anyways, let's take a look at gold. Gold, I've been showing, has been basically sideways. Not even slightly. Basically sideways. Right now, what we've done is we've moved to the top of the range. Okay? There's a bullish entry. There's a bearish entry. Which one are you? Where are we going? There's no real trend here. There's nothing that dramatically says one or the other. If you were desperate to get bullish, which is part of your trend strategy tonally, you would definitely do something like this if you're already a bull. Okay? But, you know, like, is this is this a major bullish trend? No. Is this major support besides, well, it's a psychological level, and it's also a weekly pivot, but if you got rid of the weekly pivot, I think it wouldn't matter. So it comes down to, you know, you got a psychological level, so maybe that'll help. But I'll tell you what, if I were a bear now, because that's the bullish point of view, if I was a bear, I'm expecting this move. In fact, I'm taking it down here. Which one is most likely? Roll of the die. And back, Michael. Don't forget that. Yeah. Got to go with the sweater vest. Benda says, what? I would assume you make yourself a champion. If you don't, then you don't become one. I think I know what you're saying, but yeah, like this idea. Here's how my personal philosophy is. Okay, oops, I'm trying to get rid of this. My personal philosophy is that if you're in a market where you know the top 5% make gross amounts of profit, ridiculous amount of money, and you would like to have a ridiculous amount of money, I would like to know what the top 5% of people do. But I'd also like to know what the bottom 95% that don't make money, what do they do? Well, that's easy, because most people are not that amazing. They're just not that amazing, right? Like, what prevents most people from succeeding at anything? Their work ethic is a big one for me. I don't care how smart you are. Like, I had a conversation with my son, and this was several years ago. We were at we're actually at space camp, thinking about it. We're looking at the Saturn V rockets, and space camp is 3 hours from Atlanta. And they said when they tested the Saturn V rocket, it blew out windows in downtown Atlanta. 3-hour drive away. So 180 miles away. Okay? And I was looking at that and I said, son, you have to understand that everyone that worked on that project to get a human being to the moon, they were really good at math like you. And they had a love for science, they had a love for space, and they're all working at NASA. Great. I said, but imagine they didn't have fortitude. Imagine that the President of the United States says, we're going to the moon and we're doing it in 10 years or less, by the end of the decade. And all of a sudden people are complaining like, this math is hard, and like, I have to stay late, and this isn't going to work. And right, instead they gave the president excuses. Or when, Apollo 13's up there and they're like, there's no way we're going to get those guys home. There's no solution to this. There's just no way. It's impossible. What if we had people at NASA at that time that had that attitude? But the sad thing is they're capable of doing the math. I said, being smart is a very small part of it. Because it'd be a shame for society to have a bunch of very, very smart, lazy people. You see what I mean? Yeah, and look what happened to NASA. Culture changed, and all of a sudden, boom, Elon Musk shows up, right? Now they're going to lose the war. Now they're playing catch up. The only game in town is now trying to catch up. So anyways, to me, the brilliance, the intellect, whatever you were born with, is not the most important part of the puzzle. Okay? The most important piece is that you do the work. And so the first thing I think of is 95% of people are unwilling or incapable of doing the work. That's the big, 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 big problem. And so statistically speaking, I say, hey, why don't you go to the RBA website and spend an hour? I didn't say a year interning, right? I said, spend an hour. Read some of the articles. Just read, what are they posting? What kind of reports are out there? What are their concerns in Australia? What about this import-export data? What presentations have they done lately? And what speeches have they done recently? It's all up there. Just spend an hour and just see what's going on in Australia. 95% of people can't do that. Maybe 98. Will just not do it. They just will not do it. And that's why they suck. Okay? And guess what? If you do that work long enough, you become brilliant. Or at least very, very, very knowledgeable in your field. And people that are not knowledgeable in your field will look at you and say, that dude is smart. He know RBA. Okay? Okay? See what I mean? That's how I think. So I'd say, you know what? I'm going to do it just because I know 100% of the people that are not successful, right? No, Richard. So Richard asked a question here. Send me a link. No, go find out on your own, using your own methodology and your own resources. Find out the website for the Central Bank of Australia. Figure it out. Yeah, Danielle says, I'm going to go to the Bank of Australia even if I don't understand a damn thing. You don't have to understand anything. That's what I'm trying to say. You start by doing what everyone else is incapable or not willing to do. That's the first step of moving away from the 95% of people that will fail at this to the 5% that have a chance at succeeding. It gives you a chance. You develop the type of characteristic that we know is very, very likely to be a part of a successful currency trader. Someone that goes to these websites on a regular basis and pays attention and keeps informed about the industry that they work in. Like I couldn't imagine why you wouldn't. Okay. Sanjay says, in day trading, research is not required. Wrong. That's it. Wrong. All right. Cool. But anyways, guys, that's supposed to be a motivational speech, not a knock you down speech. Stand up, take charge, act like a professional. You'll get this done. You'll be successful. Or at least you're on the right path, okay? I don't believe there's a professional currency trader on this planet that is not willing to do that. In fact, that doesn't do that. Okay? So, anyways, that's the bearish side of that trade. Right? I don't see, we're not even making higher highs on a 1 hour chart. So this is still not trending like many of the other charts. Okay. Right, Benda's right. So that's what a trade plan is, and that's the actual language I use, right? Benda says the wrong idea is to think perfection. Okay? Right. That's not what a trade plan is. I've always said it's a hypothesis, and then you use technical analysis, with a scientific methodology to confirm or deny your hypotheses. And the money is made in the hypotheses. You get the hypothesis is confirmed by the market, you make money. Your hypothesis is denied through technical analysis. What that means is the market conditions are not congruent with your strategy, with your plan. You thought it was going to go up, but it ain't going up, so you should take the small loss and move on.com. Okay? Cool. So anyways, I wouldn't be too, I'm not very excited about gold. I'm a little more hopeful with oil, but we're at a sell zone for next month, so I got to be cautious there. Okay. So like I showed you before, euro dollar near a top where you would expect dollar to weaken. Pound yen near a top or at a top where you would expect yen to strengthen. Here's CAD yen, again, at a monthly top where you would expect yen to strengthen. Okay. All of that, that's what this means. That's what this means. That's what this means. So this goes back to Prince Philip. Is it just me, or does it seem like these yens and dollars are going to strengthen? Well, it's not you, and we knew it 2 weeks ago that it would likely happen around this price. So, yeah. Okay, just tiptoeing through this one. This was another trade plan that took, 2 months to set up. And it's slowly working in a mediocre fashion, but it's slowly working. So the next step here is try to stay above the mean. Remember, right? We have the mean and 2 standard deviations. So right now, this step up, the step up as I call it, is, my mouse, is hopefully kicking off this central, right? Either here or the M2 and up to the next level, and we keep climbing. If it comes down further, it's still technically an uptrend. So let me draw that. That was supposed to be pink. Man, tough day. I'm not clicking right. But if it goes further down, then you're sort of more likely to have something like that. So we'll see. Will this Brexit uncertainty extend? Yeah, probably. Right. We're probably thinking January 31st now, but what do I think about it? I don't think about it at all, Jesse. Okay? There's 2 things. The first part is everybody freaks out about everything. So Brexit started with, it's the end of the world. It's the end of civilization. All right? Everyone and all their money is going to leave London. And London's going to become a ghost town. Where are they going to go? Paris? Frankfurt? Like, really? No, I don't know. Doesn't sound right to me, but whatever. So we'll get through it, and it probably won't be as bad as everybody thought. So you get this ebb and flow of way overbought, way oversold. So you get this situation where, yay, finally we're getting to Brexit. Brexit is coming up, and it's not going to be as bad as we thought. Everything's great. Woo! And then they find out, no, there's no solution. Maybe, and then you find out the pound is overbought, so then it comes back down, and then it gets oversold, and then people are like, see, I told you, it's the end of the world. Pound's going to be useless, and you just get this pendulum swing. That's all we do as currency traders, right? Now, it's hard to tell, like, does the pendulum swing like this, or does it swing like this, right? So that can change. It depends on the time frame you're looking at and all that kind of stuff. Timing where you go in the pendulum is difficult. Hanging on to the pendulum is just easier. Swinging with it, right? And now technical analysis says if you're a bull, you know where your prices should be if you're a buyer. So it's very easy. If you're a bull, you buy at support, and you'll do better if there's an uptrend than a downtrend. Okay? Yeah, this is messed up. So if you just walked in, Jose, right? Jose, if you just walked in, we did this 2.5 months ago. So to other people, it makes sense because we've had multiple trade plans on it. If you're just walking in, this isn't in of itself the trade plan, but you should be able to see, like, I've drawn support down here. Oops, let me get make a pen. Okay, so going back to August, all right, in particular, 3rd week of August, our plan was to be to buy. And then the second part is we've double bottomed. And then the third part, okay, is the trade plan was like this. And it started out that way, but it took a lot longer than we wanted because of the neutrality of this pair. But it's now sort of on not wave, but on setup kind of 5. It's finally still teetering up, okay? Yeah, yes it is. I do this every day, Monday through Friday on YouTube at 8 a.m. Eastern Time. Okay? What's up, 8? Okay? So, yeah, so don't freak out. In fact, we could... I don't want to kill this because it's still foul. I'd like to show you my logic, not that I'm right. So you should know the logic back here was that there was support here and there was support here. Okay? And that the plan was plan A was to buy off this roll reversal. This was resistance. Then, or look, it was support, 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 resistance, 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 resistance. If it's going to be a roll reversal, then it might be support around in here. And that was a plan A to take it up to the double top. Okay? Off of a pivot, off of a pivot. Plan B was down here. And, you know, even though plan A kind of worked, it fizzled out and came back down, retested this, which is our plan B, and then it kind of worked its way up. So, you know, it's weeks of thought process slowly working. Okay? But yeah, is there a lot of crap on here, Jose? Yeah, there's tons of crap on here, man. Okay. Okay, just make sure you're not walking into something you don't know anything about and heckle. Okay? All right. So anyway, so Kiwi Swissy just slowly kind of little bit doing its thing. Nothing very exciting. Okay? Let's do Euro Dollar. Lots of people are probably loving it or hating it. So let's clear some of this out. In fact, I'll just restart this completely. So let's do a confluence shift. I gotta move this over for you guys. Okay. Well, Jesse, it's all of it. So Jesse, for example, if you don't know where we're going, your day trades are gonna suck. Or your intraday trades are gonna suck. If you don't know where we're going, then you're doing stupid things like, oh, London breakout, what do I do now? Oh, there's a big red candle, what do I do now? Do I sell it? Right? Right? Absolute, not just mediocrity, idiocrity? Idiosyncrasy? You know, that's what most people do, by the way. When they intraday trade, it's just stupid. I love intraday trading, by the way. So when I say that, if you don't know me, you might say, well then, oh, this guy's just like a long-term only investor or something. Dude, I love scalping. I love scalping. I'll scalp any day of the week. Boom, boom, boom. Love it, love it, love it. Now, the market doesn't move like it did 15 years ago when I was almost a full-time scalper. So I look at things from all times of view, right? But in fact, for probably 3 years, my favorite chart was the 3-minute chart. It was better. It wasn't so noisy as the 1 minute, and it was faster than a 5-minute and all that kind of stuff. So I love scalping. I love spot trading. I love swing trading. I like carry trading. I like position trading and portfolio management. I love it all. Give it to me, right? But the thing is, if you don't know where you're going, I don't care what version of trading you do. Scalping, intraday trading is another way of or a spot trade to me is intraday. So, you know, day trading. If you don't know where you're going, you're going to suck. You're going to be, let's say, probably break even. If you're good, I think maybe for a while your scalping is going to be great, and then you're going to give it back, and you go in this circle. And then you come to me and you're like, Wayne, you know, I'm a really good trader and I know technical analysis, but I'm just not getting beyond break even. What's wrong? And I'm like, you don't know anything. So we'll have to fix that part. Okay. And so the most important thing on this chart, for example, is to say 3 or 4 or 5 weeks ago. And by the way, I'm not joking about that. 3 or 4 or 5 weeks ago, we knew that this area here is where the US dollar is likely to strengthen. Okay? So if you don't know that, then how are you supposed to predict that the euro dollar is coming down? You say, well, price tells me everything. I'm technical only. Well, you didn't know it was coming like I did. Fundamentally or technically, right? The big money maker here, guys, is weeks and weeks and weeks in advance. You anticipated a move that looks like that giant pink rollover. Okay? What do I call, how do I describe this giant pink thing? Hint, 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 it's in my book. What's the analogy that I use to help you remember? Yeah, Gaurav, as much as I like interns, I love money even better. Yes, an old man easing into a hot bath. The foreign exchange market reverses like an old man easing into a hot bath. Can you remember that? Okay, so you see the two pieces now? Here is a zone that I see weeks and weeks and weeks in advance. The second part is you get into the zone and you expect this giant rollover to occur. Great. Now you use technical analysis. But see, if you only, right, if you only used, let's say, small time frames, you only use this 15-minute chart and all that kind of stuff. You don't use pivot points. You don't do long-term trading. All you do is intraday trading. Then I'm already 3 weeks in front of you setting up ambushes and booby traps. Okay? My guess is I would have an advantage over you. You don't see it coming and I'm already planned. Okay? Now, it doesn't mean you couldn't out-profit me, let's say. Maybe you're just the world's greatest trader. Look, I'm just an average Joe. And you're so much better than me. I get that. That's cool. But the thing is, something that covers up my mediocrity is I have a trade plan in advance and I expect these things to happen. And if they do, I take advantage of my knowledge. That's all. So even if you're a better trader, cool. But as soon as I see a lower low, game on, man. I'm fired up. So now, this is a 15-minute chart. From now on, I have permission from the powers that be. I have permission to go full throttle, fire for effect. A lower low in my reversal zone. Gotcha. So now what do I do? Up, 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 up. Roll reversal, sell. Right? Up, 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 up. Roll reversal, sell. Okay? But these might be day trades. I'd be using daily pivots, not monthly pivots. The monthly trade is dead. We hit it full throttle, full target. Boom, done. What about weekly? Yeah, okay, well, here's the weekly trade plan. You ready for this? I got to go to yet another color. The weekly trade plan last week, if you were a bear, is to sell. That's supposed to be green. Sorry. My frustration with this drawing tool. There we go. So the trade plan last week was this if you were a bear. Okay. The trade plan last week, if you're a bear, was start that whole process right here, okay? So I guess I should draw it that way. So I'm incorporating all these different things. I guess this is what I'm saying. If I look at it from a monthly point of view, I can anticipate dollar strength in here. Then I look at it from a weekly point of view, I get my exact sell zone, my exact sell prices. Then if I drop on an intraday, right, I'm using price action, I'm using daily pivots. None of this is surprising. Do you think it has some reason? It always has some reason. Okay? Okay? So, I can't even remember who I'm talking to anymore. It matters, right? All things matter. So, if you are going to be a successful professional trader, you can't say things like, you only trade the intraday and fundamentals don't matter. It's just wrong. You just haven't done the math properly. It's just like, it's wrong. That's right? You haven't thought about it hard enough. You haven't done enough research. You don't know enough. So I say that not to, I don't know, belittle the person. I'm trying to get you to open your mind, if you will, and take a bigger look and dive a little bit deeper. Okay? But if you, so what I was saying, my point, just to make sure it's clear, yes, you can be an intraday trader. But you will be mediocre at best if you don't incorporate the actual reason money is moving. If all you do is look at small time frames, you never see ahead. Okay? Have you ever seen, what do they call it when they get in those little cars and they're driving down the dirt roads at like 120 miles an hour? Rally cars, is it? You guys know what I'm talking about? Rally car racing? Down these tiny little roads. Most of the time they're dirt. They're flying like ridiculously fast. Not the ones out in the desert. One on roads. Okay? No, not stock cars. No. On dirt roads. I believe it's rally cars, right? Rally cars. It's amazing to watch these things. And they're usually like Volkswagen Golfs or something, going like 120 miles an hour down a dirt road. How many drivers are there in a rally car? No, that moonshine running is stock cars. I'm not talking about going around track. No. Okay, yes, there's two drivers. A driver and a navigator. Two people in the car. The driver is concerned with only the short term. Like literally, the next turn. Half the time, I swear to you guys, if you've ever seen it from the, go on YouTube and do a search and see the point of view of the driver. By the time you see the turn, it's usually too late. Okay? So therefore, they have a navigator, and the navigator says, we got a turn coming up in 3, 2, turn, right? And then you see it, but you already need to be turned. So even though the short term is vitally, critically important, by that I mean intraday, a 15-minute chart, 5-minute chart, 1-minute chart, absolutely critical. You cannot trade without that. Okay? That's what the driver is most concerned about in rally car races, okay? But they need navigators. They have to see what's coming up before, or they have to know what is coming up before they see it. Okay? They need to know the track, but also what is coming up next. What do I need to be aware about next? Where's the turn? How sharp is the turn? All this kind of stuff, right? That's what the larger time frames are, is a map and a guide. So if you love intraday trading, you're like, Wayne, I love the 15-minute chart and less. I'm like, so do I, man. So do I. I love the 15-minute chart. I love the 5-minute chart. I love the 1-minute chart. I love trading. Okay? But if you don't know the layout of the track, if you don't know where the turns are in advance, you're going to end up in the ditch. You're going to smash your $130,000 Volkswagen Golf that you souped up and put roll cages on and changed the suspension on, changed the exhaust on, put massive tires on. You did all that work and then you just put it in the ditch and rolled it. Okay? So I have always thought that you need a healthy respect for all time frames and a healthy respect for both technical and fundamental analysis. So when I started as a trader, The professional investors that I knew, the guys that were managing hundreds of millions of dollars, they laughed in my face. You use charts. You're an idiot. You're a fool. They either said it or you could see it in their eyes. And I'm pretty sure one guy actually said it. Can you imagine? I'm starting off my career and they look at me and they're like, you're an idiot for doing this. And then, of course, the other thing is I was a Forex trader. It's kind of how like Bitcoin people were, oh, you trade Bitcoin? You must be, whatever. So anyways, Forex was like that. You trade Forex and you use charts, you're an idiot. Okay? But what do you say to someone that says it's only charts and no fundamentals? Are you an idiot? What percentage of Forex, right? What percentage of Forex do you think is actually trading? Oh, it's $5 trillion a day. Yeah. How much of it is it trading? And how much of it is just banks doing bank stuff and business doing business stuff? 95% of it. I mean, just most of Forex is just fundamental business and financial activity. That's all it is. The vast majority of it is businesses and banks doing their stuff. Very few of it is just us trading. So by definition, then, it's all fundamental. So for example, should Nike build a new factory in Vietnam? Well, depends. There are fundamental risks. There's things like currency exchange. There's like central banking change. And what about this trade war between China and the United States? Well, it's not Vietnam, but it affects Vietnam and all this kind of stuff. Where are we in the business cycle in the United States? Where, is the consumer still buying? What if there's a slowdown in consumer behavior? Then maybe Nike doesn't need as many shoes. And all these things are like real concerns. What's the cost of financing? What if it takes you 5 years to build the new factory? What's the world going to be like in 5 years? Do they build the factory and then the factory opens up in the middle of a recession? And these are real business concerns. If you're a business right now, planning for the next 5 years is not an easy thing. And it impacts your investing, your CapEx, your capital expenditures, or your foreign direct investment. And these are the things that change the value of a currency. It's all fundamentals. It's all fundamentals. But then you're like, well, wait, I could just trade price action. Yeah. Technical analysis only helps you with the timing. It only helps you with the timing. It just tells you price and time. What's a good price and when? Should you do it now? No. Why? Well, I'd like to see a 5A cross. Good, wait for the 5A cross. But if you're going to buy it, you have to buy it at support. Are we at support now? Well, we're near support. All right, so don't quite buy it now. And then what are you going to do when it hits support? What are you looking for? I'd like to see a 5A cross. Okay, good. But that's just technical analysis. It doesn't impact whether Nike builds the factory or not. But Nike building the factory or not does impact foreign exchange market. You see what I mean? All of it, Danielle. If Nike decides to not build the factory in Vietnam because of the local environment, the political environment, let's say, and for some reason they say Thailand is better, then instead of investing, let's say $75 million into Vietnam, they decide to invest $75 million into Thailand, which means they need Thai baht. And so $75 million worth of Thai baht get purchased by Nike, and that has an appreciation effect on the Thai baht. It also lowers the value of the US dollar. Singapore might be better politically, but it might be too expensive. Remember, when you're trying to sell shoes and make shoes and make a profit, you need cheap, man. You need cheap. Okay? Thank you, Bitcoin miners, hash rate. Thank you. Okay? So it's interesting, right? All of this is fundamentals. It's very, very important to know these things. And then technical analysis helps you predict, which is fine, right? So all I'm saying, and again, this goes back to Prince Philip, and he's probably, Prince Philip's probably thinking, I'll never ask another question again. No, I'm sorry. Okay, that's not my point. But it's such an important question, that's why I'm going to keep harping on it. Okay, some of you guys have been with me for years. Some of you guys, you're on your first day. For those that know me well, okay, is this a predictable entry for being a bull? What would Wayne do? Would Wayne say, if you're a bull, this is the price? Okay. Based on monthly, yeah. And what about like up here? Is this a predictable get out zone? Yeah. I'm not making any of this up. Not making any of this up. So now put this into context. If I was a bear, how would I look at this market? Well, I'd be looking at this lower low, lower high, lower low, lower high, right? Lower low, lower high, lower low on a 4-hour. But then I would also assume a bigger move in general, a fundamental move of dollar strength. Okay? I would look at it this way. I would look at Fibonacci retracements. I would look at things like roll reversals or something. But as a bear, by definition, if I'm a bear, I believe it's going to make a lower low and then a lower high. That's what a bear thinks. So therefore, bears are going to think this, and it's going to make a lower low. Okay? That's the moneymaker. Now, you don't know if that's correct. I don't know if that's correct. But that's the sum of your analysis if you're a bear. And most likely, if you trade the sum of your analysis, you'll do well. What will the 15-minute chart look like over the course of, this is June, by the way, from the middle of June to November? Will your 15-minute chart always give you bearish profitable setups? No. But that's where we're going. Now, my concern with most people that trade only the 15-minute chart, only intraday, only technical analysis, is they don't realize that they don't realize why sometimes the market goes up and why the market goes down. They're just following the market after it's done it, which means they're always, always, always late. What I'm trying to show you is you can be weeks, not even days or hours, weeks early and waiting and setting things up intellectually and emotionally. Okay? So you can say, all right, it's been up for a month, but if I'm a bear, I'm going to look somewhere in here. I'm going to look for something like this. Here's price action. Up, up, down. Okay, you understand? Up, 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 down, down, buy. Is that a good place to sell? No. Up, 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 down, down. Is that a good place to sell? No, that's a buy. Right? Up, 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 down, 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 down. Is that a good place to sell? No, but somewhere between here and here would be. Is that fundamental analysis? No. No, not fundamental at all. Pure technical. But the thing is, I've been waiting for it for 4 weeks. And I knew somewhere around here, it was going to happen. Well, I didn't know it. I planned for it. So once I get the lower low, lower high, now I go ape crazy on a 15-minute chart. I know when and I know why. Okay? Okay? What I think other traders try to do is buy it here, sell it there, buy it here, sell it there, buy it here, sell it there, buy it here. And I think if you've been doing this for 1 or 2 or 3 or 4 years, or even 1 or 2 or 3, 4 months, you'll find that that is actually impossible. So you need to really have an investor's mind and a trader's capabilities. Okay? Think of that as the unified theory of trading. Okay? You need to know why, and then once you know why, the next one is at what price, and then the third question is when. Okay? So you could say, why is the US dollar going to get strong? Because the Fed is cutting interest rates. What happens when the Fed cuts interest rates? The dollar gets strong. This is your bias. Has the Fed announced they're going to stop cutting interest rates? No. This dollar weakness is people assuming or interpreting what has been said as we're at the end. But you might say, until they announce, I don't care what opinions are. You only trade the policy. How many people understand that point right then and there? You don't care about market opinion. You don't care about market sentiment. I'm not saying you have to. I'm just saying if that could be your attitude. You don't care about sentiment. You don't care about opinions. The Fed is either cutting interest rates or they're not, based on what they tell you. If it's not written on the homepage, it doesn't exist. In that case, the Fed is cutting interest rates. The dollar will continue to get strong until they announce that they stop. Now, here's the interesting thing about that hard and fast rule. You would have missed this upward move. So what? But I'll tell you what, you would definitely have missed the opportunity to lose money, right? For example, using just basic setups, right? This was a sell period both on a weekly and monthly basis. That one didn't work. Well, it only worked for 3 days. Would you have moved your stop if you were profitable for 3 days? Yeah, probably. And then we know somewhere up here, okay, this is a bigger zone. Somewhere up there is going to be your sell. And on a weekly basis, by the way, let's clear this out. So let's say at the beginning of the month, you would have considered like this is a possible sell zone, this is a possible sell zone. But then when you actually get there, right, on this particular week, this is the sell zone. Well, that one happened to work. Cool. Whatever. But that's what the smaller time frames is. But you would have like broken even here, okay, or made a small profit. And then you would have tried again here, or the next trade, which is here, right? You got all those trades. So what I'm trying to say is down, 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 up, up, sell. Down, 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 up, sell, right? You could even try there, but whatever. Down, 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 up, sell. Down, 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 up, sell. Uh-oh! 3-wave correction. Have you changed your attitude here if you had the hard and fast rule of you trade the policy written on the central bank's website? And if you did that, you would have taken lots of profit down here, and now you've been waiting with no trades for weeks until you got into here, and now your eyes are wide open. When's it going to roll over? 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 And then it rolls over. Fire for effect. Game on, man. Game on. You're back on. You're back on, crushing it, taking it down. Downtown. Or you can just run around like a chicken with its head cut off, making a bloody mess of everything. Just trading 15-minute chart blindly, logging in, and you're like, well, I wonder which way London's going to go today. Oh, I wonder what's going on. Dude, just think of it. If you got that mental attitude, you walk in and like, I wonder what's going on today. Oh, look at that big green candle. I guess we're going up today. Oh my God, seriously? You're driving down a dirt road in a Volkswagen Golf at 120 miles an hour and you don't know where you're going? Michael says, so you don't change your bias? I said, that's one way. I said, you can ignore the sentiment. You can ignore the other things. That's what this is, by the way, guys. And I explained it earlier, so I'm not sure if you missed it. But this huge move you can see in the Fed funds futures market is a change, right? Remember at the beginning of the webinar, I was talking about finance, the expected change in policy. And you can see that in the pricing of Fed fund futures contracts. Do you guys not? What? How many people here don't follow the pricing of Fed funds products? You don't follow money market? What? Hang on. My astonishment, right? Hang on. That's got to be a good, what do you call them? A thumbnail. Let me do that for a thumbnail. Right? I'm like, there we go. Thumbnail. What? What do you do all day? Yeah. All right. Well, let's fix that. Do you mind if we jump into that? I didn't know I was going to do this today. All right. All right. All right. Well, I'll tell you what. There's 200 people in the room and only 100 likes. Yeah, I'll fix that. I will teach you the truth. I'll show you what bankers do. I'll show you what bankers do. The secrets, the secret bankers. You guys, you get all that crap on YouTube, right? Trade like with the secrets of the bankers. Yeah. All right, let's see. Yeah, 10 people. Wow, look at this. People are leaving. All right, they didn't like that. I apologize. I must have had a bad tone. FedWatch. They're like, he's condescending. All right, I take it back. Just trying to have fun, yo. All right, for the 8 people that clicked like, thank you very much. Fed countdown. You trade Korean won? 2 days to the next meeting. Yeah. Thank you for the likes, by the way. All right. These are products. Okay. Here's our months. October, December, January, March. These are actually the days the Fed may or may not adjust interest rates. These are the Fed FOMC meetings. So the next one is October 30th. Coming up hot, 2 days, right? Okay, so let's do this. Your banks now. This is just banks. Banks around the world. Smart money. Okay? They are required, assuming they do business in the United States, they are required to keep money at the Fed. The reserve requirement ratio in the United States of America is 10%. So 10% of all deposits at any bank must be deposited at the Fed. That's a minimum, by the way. You can also have excess reserves. Those are required reserves. A bank could also choose to just, let's say someone walks in and has $1 billion in cash, and the bank says, you know what, we don't really want to keep this $1 billion in cash in a vault, so we'll just park it in our account at the Fed. So they could actually just park it at the Fed. It's not a required reserve, but banks don't really want the cash in their vaults, right? You need some at the tiller windows, but you don't need $1 billion, right? So you're like, let's just park that at the Fed. And then, of course, you could always withdraw it now as a bank, not as cash, but as ones and zeros. So like, here you go, Fed, keep the bills, the actual cash. Give us the ones and zeros on our computer screen. Okay? So anyways, that's what that's about. Now, when you manage your balance sheet, you have these required reserves. And you have these demand deposits, which are liabilities on your balance sheet. And clients can come in and say, give me $50. And another client comes in and gives me $200. And another client comes in and wants to deposit their paycheck. So they deposit their paycheck. And these are deposits and withdrawals, right? Assets and liabilities and all these different things. Okay, great. So you need to have some cash in your vault to cover that, right? So you need some, but of course, a bank doesn't need $1 billion, but they need some. When grandma comes in and is like, I'd like $20 out of my checking account, please. Right? And great. So you got to give her the $20. It's on demand. They have to do it. Okay? Cool. What happens if the largest customer or your largest depositor decides to close the account? I want my $5 billion. By the way, I know someone at, I guess I shouldn't say the bank. He went to his bank in Europe and asked to withdraw all his money. It was so much money that the bank didn't have it. And after about 4 months, maybe 6 months of lawyers and all these different things, this European bank had another public offering. They sold ownership of the company to the public and raised, by chance maybe, the exact amount of money that was required to pay his money. Now, you don't believe me, I'm sure, but it did happen. And let's say it was B's, not M's. So he withdrew his billions and they didn't have it. They couldn't even raise it. They had to go to the public market and sell shares. Yeah, and it came out to the exact number. Yeah, and the interesting thing is the lawyer involved now works in the White House, which is interesting. But you didn't hear any of this from me. So anyways, these banks sometimes get in a situation where they're short on cash. See, deposits come in. Now you have the cash as a bank. But you don't make any money holding the cash. In fact, you have to pay them money. Okay? You have to pay them. They deposit money with you. You take care of the money for them. You keep it safe and you track it with nice software and you provide a debit card or a credit card, nice banking facilities for them to do their business in. There's a nice online website that's secure but easy to track all your flows. And yet you have to pay them? Whoa, that's weird, right? But you get this opportunity now to take this deposit and you can loan it out to somebody for 5 or 6% profit. Okay? Oh yeah, I got to pay attention to that. I have to do that. Yeah, I'll do that. So anyways, after some time, most of the money is tied up in like mortgages, right? You took a deposit, you loaned it to somebody in the form of a mortgage on their house. They want to buy $1 million house. They only have $200,000 in cash. So you pony up the $800,000. that you borrowed from depositors, you lent it to somebody else, and you're collecting the spread, right? You pay the depositors 1%, you charge the jumbo mortgage person 6%, and you're collecting 5% as profit. Cool. But then one day, one of your clients comes in and says, I'm closing my account, I'm moving to Brazil, give me all my money. And you're like, dude, I don't have any of your money. It's all in this mortgage. So the mortgage is paying. Every month you collect a mortgage and it's profitable. You're earning profit. The loan is performing well. It's a good asset, but you have this liability. You owe this depositor their cash. So you don't want to sell the mortgage. I mean, it's working. Now imagine if you were like Bear Stearns and all these companies in 2008 that were running into financial trouble. They had tens of billions of dollars of mortgages and other assets that were performing well. People were paying their mortgages. Most people did. And they were good portfolios, but they were short on cash. Okay, so typically in this situation, in a normal market, a bank manager might be short on cash. But they have a good performing portfolio of investments by loaning out the depositors' money, but now they need to pay the depositors when they ask for it. So, long story short, if they're short on cash when it comes to the reserve requirement ratio, remember, 10% of all deposits must be parked at the Fed. Well, throughout the day, people deposit more money and they withdraw money. They deposit more, they withdraw, and then they withdraw, they add more, and you never know what's going to happen tomorrow, right? And you're managing now your investment portfolio to try to make money and provide the service to all your clients. So it's very difficult cash flow wise, right? Even though you have good assets, there's a cash flow problem. Especially if people come in and withdraw more than you expected. That means you might be a few dollars short at the Fed. So what do? You don't want to sell the assets, they're good assets. So what do? You borrow from another bank. And you're like, hey dude, I just need money overnight and I just need to park this at the Fed and it just covers like this gap in cash flow. And then I'll take care of things on Tuesday. By Wednesday, we're all good again. Okay? Banks do this to each other. So they're literally overnight loans or very, very, very short-term loans. Okay? But the point here is it's to cover the deficiency in the required reserve parked at the Fed, and it's only banks working with banks. This is not investors. This is not traders. This isn't you and me. This is JP Morgan loaning money to Bank of America. Bank of America is not doing anything wrong. It's just the cash flow issue, and it's just for overnight. And then the next day, Bank of America might actually be lending Wells Fargo money just because by Wednesday, now Wells Fargo's in that situation, and Bank of America's fixed its problem. And so whatever, it's just a normal part of business, okay? Now, the interesting thing here, the risk isn't that Bank of America won't pay JP Morgan back. I mean, the chance of that is like zero, right? Because it's an overnight loan. I mean, Bank of America is not likely to fail overnight because it's short a couple of $1 million in Fed reserves, right? So that is zero. But what if the interest rates change? Should JP Morgan charge 2% or 2.25%? Well, what if interest rates go up? Well, what if interest rates go down? How would that impact these overnight loans? Okay? Now, here's the interesting thing. You could track that out. We know when interest rates are likely to change. And according to this, 94.1% of the smart money, banks lending money to other banks, believes we're going to be at this 1.5 to 1.75% rate. How do we know this? The way that they price their investments to each other. So they don't really charge interest rates. They're like, look, dude, I'll lend you I'll lend you $990 million, but you pay me back $1 billion. It'd actually be more like, I'll lend you $999 million, you pay me back $1 billion. Okay? Very small percentage. It's a very, very small percentage for an overnight loan or very, very short-term loan, right? And by the way that the deals get negotiated, you can reverse the math. It's just reverse engineering to figure out what interest rate they basically used in the calculation of their price. Right? Do you remember the higher the interest rate, the lower the price? So if the price is low, the interest rate they used in their discounting was high. Okay? So you just reverse engineer the thing and say, oh, the price was low, therefore what's the right word for it? Anyways, the interest rate was high. Okay? So that's how they figure it out. Not through opinion, not through sentiment. This is actually how banks every hour of every day negotiate with each other and price their short-term loans to each other in the interbank system. And from the prices they actually charge, you can calculate what the interest rate was that they used, which means they anticipate what the interest rate was going to be and price it in now. Okay? So, check this out. Thank you, Bitcoin. I did like that one. Thank you. That's how they're pricing things right now. Based on that, 94% believe interest rates are the same. Look at this. 5.9% think interest rates will go up. Isn't that interesting? Oh, everything, I'm sure, Forex student. But, it's so easy to do. Okay? So look at the pricing, guys. The average price for a $100 loan, right? So you're like, dude, will you loan me $100? Here's what they said. No. I'll loan you $98.17. But you pay me back $100 tomorrow. See how that works, guys? There's no interest rate. I'll loan you $98.17 today. And by the close of business tomorrow, you pay me $100 cash. Okay? Cool, right? No interest rate. But you could reverse engineer that and figure out what they were basing it on. Okay? So 94% of these deals, when you do the calculations, assumed we're at this 1.5 to 1 3/4. And some people are actually pricing it like interest rates are going up. Not very many, but some. All right, that's how they did the deal. Not opinion, guys. Actually negotiated billions and billions and billions and billions and billions and billions and billions of dollars worth of stuff. Well, what about the December? 20% currently. This will change. This is fluid based on negotiation. 20% believe at the December Fed meeting, interest rates will be lowered. 75% believe there's no change. And less than 5% believe interest rates are going up. Can you see that the vast majority believes there's no change this week, right? And there's no change in December. Now, put this in perspective. The dollar started weakening about 4 weeks ago. you will see that this change, okay, has been happening or correlated to that move. Meaning there was a period where interest rates were going to be even lower in December. People thought it would be more like 1% because they thought they would cut in October. Then they thought they would cut in December. Okay? So just 4, 5, 6 weeks ago, things have changed. 6 weeks ago, by the time we got to December, a much bigger part of the market thought we'd be at 1%. 1% isn't even on the possibilities right now. 1.25% is only 20%. So 75% of these deals are being negotiated bank to bank as if interest rates are not going to change at all anymore in 2019. Okay? And when that occurred, the dollar weakened. But I told you, as soon as the market expects or anticipates the Fed is at the end of the cutting cycle, the dollar will weaken. How many people heard me say that at least 5 times? The moment market participants anticipate the end of the cutting cycle, the US dollar will weaken. That's what this tells you. Not my opinion, it's the opinion of bankers negotiating with bankers. You just now have a tool to use. Okay, January. This is interesting. January, almost 60% of people still think even in January the Fed won't cut. But a lot of people actually believe the Fed will cut. So let's say most market participants think no rate cut on Wednesday, then no rate cut in December. But you could actually say as an authority, there's significant pricing in of a Fed cut January 29th, 2020. Yeah, Peter says my professor doesn't agree with me, but I'm right. That's the thing. Okay? Right? So don't go to Harvard, just listen to me. Okay? So, check this out. How do we know all of this? Okay? If you, right? I will lend you $98.47. And you have to pay me back $100. Notice how that changed. 98 and a half, let's say 98.50, what 98.40, 98.16. See, you're borrowing, so remember, this is all reverse, right? Because it's always weird when you're in this situation. If you need to borrow $100 and I'm like, oh, well, I'll lend you 98. And you're like, well, that's really good. I need the 98, but I'm actually still $2 short. So then like, well, I'll lend you 100, but now you got to pay me 180 back, right? And you're like 100. So it's weird, right? It's sort of reverse, but you can get it, right? I'm lending you less today, but you still owe me $100. In December, I'll lend you a little bit more, 98.40 instead of 98.10. Big difference. Oh, little, right? This says there's more chance of interest rates falling. What's the, think of it. Now this is price. This is the inverse relationship between price and interest rate. If market participants believe the Fed will lower interest rates, money in the future gets cheaper, which means I lend you more of the 100. Does this make sense? Money cheaper, so you owe me less, which means I lend you more, and you always give me my 100, right? And now we go to January. Significantly more people believe interest rates are going down. Therefore, money in the future will be cheaper to borrow, which means you still owe me the $100, but I'm not charging you as much, so I'm lending you more. Instead of charging you less, I just lend you more. Okay? So on and so forth. And you can go through this, and based on the negotiations, I can find out that by March, 35 plus 10, 45, right? 45% of the market, it's not quite 45, whatever this is. Right, let's say, 15, 40, right? 40% of the market believes interest rates will be lower than they are today. So, therefore, based on that, I charge you less for the $100 loan. But whoa! Did you miss the point? Make sure you write this down. If money is right, if market participants believe we're at the end, then the Fed is not buying any bonds, which means nobody's front running the Fed, which means nobody's in that trade, which means the dollar weakens. Okay? So here's a point where we feel like the Fed is pausing for 6 months and then cutting. Talk to me, Goose. Who's got this? The Fed is paused for 3 months and then resumes cutting interest rates. But what happens? Currently, the dollar weakens, and then the Fed starts talking lowering interest rates. And if that's true, what happens when the Fed lowers interest rates? What happens to the dollar when the Fed lowers interest rates? The value of the US dollar rises. So therefore, in conclusion, my name is Wayne McDonald, Chief FX Market Strategist for Traders Way, and I'm saying under short-term fundamental market conditions, smart money believes the Fed is not going to cut interest rates, so the dollar weakens. But in 2020, the market participants are currently pricing in some additional rate cuts. And as we approach that period, if that still is true, the dollar will strengthen again. Predicted the future, yo. Have a great day. I'll see you tomorrow. Thanks for being on my team. Thank you for being part of Forex.Today. Make sure you subscribe, like, leave comments. Love you in my life. I'll see you